Assalamualaikum. My name is Bint-e-Atif. Welcome to Smart Commerce classes. We are starting with 7707 accounting paper of summer 2022, 21 variant. Nakul is a trader. He buys and sells good on credit. He buys most of his supplies from one supplier, Nadia, who allows Nakul a trade discount of 20%. The following transaction took place in January 2022. Okay, requirement is prepare the purchases journal for January 2022, total of the journal and indicate the ledger account to which the total would be posted. Okay, we'll make Nakul purchases journal. So Jan 2 paid $441 by check to Nadia in full settlement of 450 owed to her at 1st January 2022. 12 January bought goods on credit from Nadia. So bought goods, that means purchases. Bought goods on 18 Jan, that means purchases. We'll write 12 Jan. Nadia. As it is written, he buys most of his supplies from one supplier, Nadia, who allows Nakul a trade discount of 20%. That means when he bought goods on credit from Nadia, less price means that we have to deduct trade discount from that. 350 multiplied by 20%, that will be a trade discount that was offered to Nakul by Nadia. That will be deducted from $350. That means 350 multiply 350 minus 350 multiplied by 20%. That means 280. Then we have on 18 January, bought goods on credit from Nadia, less price 400. 400 minus 400 multiplied by 20%, or we can simply write 400 into 80% because 20% is the trade discount and the remaining amount that is to be paid or to be written in the books. So that would be 400 into 20%. That would be 320. Then we have bought goods on bought goods on credit 60 from Sophia. 29 Jan Sophia 60, because it was written that 20% discount was only given by Nadia, who allows Nakul a trade discount of 20%. That means only Nadia gave Nakul 20%, not Sophia, not any other supplier. Okay. 60. Now total will be transferred to purchases. Account. That would be 280 plus 320 plus 60. That would be 660. Now moving towards prepare the purchases return journal for 2022 January. Total, the journal indicate the ledger account to which the total would be posted. So Nakul purchase return journal. So it is written for, on 14 January, returned faulty goods to Nadia, a less price of 80, then returned goods to Sophia 9. Okay. So we'll write Nadia on 14 January. List price, that means 350 multiplied by 80%. That means then we have Sophia. It will be transferred to purchase return account. That would be 64 plus 9, 73. Now, moving towards C part. Prepare the account for Nadia for January 2022 as it would appear in the books of Nakul. Balance the account and bring down the balance on 1st Feb 2022. So, Nakul, Nadia account. Okay. In Nakul books, Nadia account. So we'll write as it is a supplier. So balance BD first Jan was 450. Paid 441. By check to Nadia, it was a limit of 450. That means 450 owed to her at 1st January. 450 was the balance BD. Then we have on 12 and 18 we bought goods purchases at 12 Jan of 280. That is already calculated above over here. 280 and 320. Now we have on 18 January. 18 January purchases of 320. Then we have purchase return. Purchase return on that was 64. Then we had on 2nd Jan bank. We would have 2nd Jan. Yeah, it's okay. Bank. That was 441 and a discount. Discount received was 9. There is no other entry, so we'll write balance CD. That would be 450 plus 280 plus 320 minus 441 minus 9 minus 64. That will be 536. Total is 1050. 1050. Balance BD on 1st Feb is 536. Okay. Moving towards D part. Complete the table by placing a tick 3 to show where each item is shown in the statement of financial possession. Okay. Current liability, non-current liability, trade receivable are okay. Trade receivables are the short-term liabilities that are to be paid within a year. That means they are current liability. Bank overdraft is also to be paid within 12 months, 1 year. So they are current liability. Current liabilities are liabilities that are to be paid within a year. And non-current liabilities are liabilities, long-term liabilities, which are paid after 12 months, after a year. That means after 2 years, after 1 year, after 5 years. That is a long-term period. Okay, moving towards Nakul has a bank overdraft. Okay, now we have Nakul has a bank overdraft and would likely to reduce it. He is considering paying his suppliers later than he currently does in order to help him reduce his bank overdraft requirement. Advise Nakul whether or not he should take longer to pay his suppliers. Justify your answer by providing two advantage and two disadvantage. It is of 5 marks. Okay. First of all, advantages of paying longer. As he can delay the outflow of cash. When we are paying the suppliers, the cash is going out. That means there is a cash outflow. We'll reduce the cash outflow, so we'll pay that cash that was used to pay to the supplier to the bank to reduce the bank overdraft. Then we can bank overdraft charges may be higher than cash discount offered by supplier. As a supplier mostly offers the cash discount to pay debt quickly, so it would be lower than the bank overdraft charges. That means the bank overdraft, interest is also paid. So if we'll pay bank overdraft quickly, then we'll pay to supplier. So the cash flow problem would be reduced. May currently be paying. Okay, then we can write disadvantages. Disadvantages of paying Nadia or other suppliers lately. That means Nakul could lose the cash discount that was allowed by Nadia, 20%. Sorry, that was trade discount. Okay. Nadia would charge interest on late payments that would reduce the profit for the year. Nadia could stop supplying further purchases would be reduced from Nadia. This can be a valid point. Okay. Fatma is a sole trader. She prepares her financial statements to the end of March each year. At 31st March 2022, Fatma's ledger account balances included the following. Okay. First of all, we'll be reading the adjustment and then we'll do the question. We'll start the question. Inventory at 31st March 2022 was 3120. That means closing inventory was 3120. Fatma took goods for her own use from the business drawing. The year ended 31st March 2022. These goods cost 1300. That means that drawings of goods. That means the Double entry for this adjustment will be drawings to purchases. That means from the cost of sales, we have to deduct 1300 by writing drawings. Okay, third adjustment is depreciation on fixtures and fitting is to be charged on 20% per annum using the reducing balance method. In reducing balance method, we apply percentage on the carrying value. Carrying value is calculated by deducting the depreciation from the cost of an asset. Fourth, accrued wages at 31st March 2022 were 800. That means we haven't paid wages 800. So it will be added in wages plus 800. Then we have rent includes the payment of 1500 for the 3 months from 1st March to 31st May. March, April, May. And our year end is 31st March. That means that rent includes prepayment of 1500 for the 3 months. So we'll deduct as our year end is 31st March. So it's so the rent includes 1st March to 31st May. So 1 month would be written in income statement and 2 months rent would be prepayment. We'll deduct 2 months payment from the rent payment. An irrecoverable debt, that means from rent we have to deduct 1500 divided by 2 by 3. Then we have an irrecoverable trade receivables of 200 is to be written off. That means from trade receivables, we'll deduct irrecoverable debts will come in income statement and it will also come under current assets in financial position. Okay, then we have provision for doubtful debt is to be set on 3% trade receivables. So on total receivables, we'll apply 3%. Net receivables, we'll apply 3%. Okay. We have to prepare Fatma's income statement for the year ended 31st March 2022. Okay. Now we have revenue, sales return. Okay, 79400. Okay. Revenue. Revenue is 79400. Then we have sales return that are deduct sales return that will be minus from sales. Okay. We have 79400 minus 3970, 75430. Then we have less cost of goods sold. We have opening inventory. Then we have purchases. Then we have drawings, good drawings. Then we have closing inventory. The opening inventory, we have to write inventory at first, April 2021, 3,000. Purchases are 36,500. Goods drawing will be deducted. That means 1,300 will be deducted. Then we have closing inventory. 3,000 plus 36,500 minus 1,300, that is 38,200. Closing inventory is 3,120, that will be deducted, and we have that will be deducted to calculate gross profit. Okay, gross profit. Gross profit is 403 75430 minus 35080 equals to 40350. That is gross profit. Then we have any other discount or any other income that is given in the question. It is written that we have discount received 1095, insurance, general expenses, wages, rent, that is expenses. Okay. Discount receive. That will be added 1095. That will be added 40350 plus 1095. That will give us 41445. Then we have less expenses. Expenses are rent and rates. That will give us 8,000. Then we have wages. That will 10100 plus 800. That will give us 10900. Then we have general expenses. That are general expenses are 1287. Then we have insurance of 1,800. Then we have gadgets. Gadgets of 200. Then we have provisions. Provision is to be calculated. As we have 6,400 in trade receivables, so we'll deduct the bad debts that are 200. This will give us 6,200, on which we'll apply 3% provisions rate. Okay. Provision would be 6,400 minus 200 net trade receivables multiplied by 2%. That will give us 30. Then we'll calculate the depreciation. depreciation is calculated by reducing balance method. 80,000 is the cost. We have fixtures and fit equipment at cost 80,000. We have provision for depreciation. That means accumulated depreciation is 39040. So we'll deduct 80,000 from 39040. That will give us the carrying value or net book value, at which we'll apply the depreciation of 20%. Okay, depreciation of 80,000 minus 39040 multiply by 20%. That will give us 8192. Now we'll have profit for the year. Okay. So we'll add 8,000, 10900, 1287 plus 1800 plus 200 plus 30 plus 8192. That will give us 340. Okay. Now we'll deduct 30409 from 41445 to calculate the profit for the year. That would be 11036. Okay, moving towards part B. Prepare Fatma's capital account for the year ended 31st March 2022, balance account, and bring down the balance on 1st April 2022. So we'll make the capital account of Fatma. So moving towards balances. Okay, it is written at capital at 1st April 2021 was 59,000. We have drawings of cash and drawing of purchases of goods and profit for the year as well. Okay. Capital, now a credit balance. So balance BD of 59,000. Then we'll add profit for the year. That is 11036. Then we'll add the drawings, cash and goods. That means 8580 plus 1300. 1300 was drawings on good. 8580 was drawings of cash. So it will give us 9880. So balance CD would be 59,000 plus 11036 minus 9880. That will give us 60156. So the total would be 70036. So the balance BD would be okay. Now moving towards C part. Fatma would like to expand the business. She thinks that additional finance of 20,000 would be required for the equipment which she would need. Fatma's bank have offered to lend her 20,000 to be repaid after 4 years at interest of 6% per annum. Requirement. Advise Fatma whether or not to agree to the bank loan. Justify your answer. It is a 5 marks. So we have two marks for whether to take bank loan, 2 marks against bank loan, and 1 marks for the evaluation. So we'll write that bank loan is for 4 years. That means we have to pay 20,000 after 4 years to the bank. Then we'll pay 4-year interest as well. For annum, we'll pay 20,000 into 6% interest. So that will reduce interest payment will reduce our profit for the year. Okay. We can write that repayment of interest and loan would due when due improves relationship with the bank. As bank is the cheapest way of bank loan is the cheapest way of raising finance. 2 points in favor and 2 points against accepting bank loan are bank loan is to be repaid, bank loan interest is to be paid. That would reduce our cash and profit. That will result in cash flow problems. And bank loan has to be repaid by set date in future. Bank may require security or personal possession as well to give loan to Fatma. So then we have question 3. Jules is a hairdresser. He bought some new energy saving hair drying equipment, 1900 on credit from HYZH Limited on 30 April 2022. Requirement. Prepare the journal entry to record the purchase of these hair dryers. A narrative is required. So we'll write he bought some energy saving hair drying equipment. So we'll write hair drying equipment of 1900 that are bought on credit. That means by ZH Limited 1900. So the narration would be purchase Okay, moving towards B part. The new hair dryers will use less electricity than his old ones. There will be an additional insurance charge for the new hair dryers. The old hair dryers have been fully depreciated so that their net book value was nil. B part. Requirement is complete the table by placing a tick to show whether these changes in expenses increases or decreases the profit. So heat and light is an expense that will reduce the profit. Depreciation is an expense that will reduce, as it is written, that the new hair dryer will use less electricity, so the heat and light would be reduced after using new hair dryer. So the heat and light will increase the profit as depreciation will decrease the profit, insurance and expense that will decrease the profit. Now moving towards C part. Prepare the general entries required to correct these 5 errors. Narrative is not required. Okay, first one is the total for general expenses 28 in the petty cash book for April 2022 has not been posted in the general ledger. That means it is the error of omission. Error 1, that is general expenses $28 total of the general expenses is not written. That means the credit side would be expense account. $28. Now the second error is the direct debit to ISAC, a supplier, 195 had been recorded as 159 in the account for ISAC. There is the error of wrong amount. So it will be ISAC. We have written direct debit to ISAC, a supplier, 195 have been recorded. Okay, less amount is written. So that is 36. Then we have suspense. 36. And error 3 is a payment by credit transfer for wages 144 has not been recorded in the accounting records. So wages, a payment of credit transfer for wages 144 and very good. Okay. Then we have error 4, the discount received total for January 2022, 38 had been debited to the discount received account. Okay. Suspense. Discount received is debit. Okay. Discount received. It will be 76. This is the error of complete reversal. So we'll multiply the amount by 2. So fifth error is the account for rent and account for commission receivable have both been overcast. This is the error of compensation. So we'll write commission receivable. They have written that the accounts are overstated. So we have to deduct 200 from commission receivable and 200 from rent account. Then D part is prepare the suspense account. Include the original difference on the trial balance as a balancing figure. So okay. We have discount received We have general expense to suspense. That means in suspense account, we'll write general expenses. We have suspense to discount received error 4. So we'll write discount received on debit side on expense account, suspense account. So it will be 76. Then we have general expenses. That are 28. So we have ISAC as well. ISAC to suspense, 36. ISAC will come on credit side, 36. So 28 plus 36 would be deducted from 76. We'll have the difference in trial balance. That will be 12. Total will be 76 and 76. Allah Hafiz.